on trading hour. Gokaldas Exports is the stock on our radar right now on the back of its Q1 numbers. Now, the numbers are weak. The company has clocked in a revenue decline of 16% on a year-on-year basis. Key markets like US, revenues down 26%. UK, revenues lower by 23%. EU, a revenue slump of 19% in the April to May period. The company has said it's the excess inventory with major brands coupled with slower retail offtake which has affected and contributed to the fall in demand. That said, the gross profit margins have expanded sequentially but down on a year-on-year basis. Both the EBITDA and profits are down year-on-year and on a quarter-on-quarter basis. The stock, let's just do a quick stock check before we invite the management on board. I think it's down close to about 1% in trade. We're joined by Sivaramkrishnan Ganapathi, the Vice Chairman and MD of the company. Mr. Ganapathi, morning, and thanks so much for joining in. This is Reema here. You've said, key markets like US, UK, EU have declined in the month of April to May by about 20-25%. How has June and July been for you? Are you seeing any improvement in demand?
Yes, so the improvement in demand, I'm hoping will be picking up in the second half of this year. So most of the global brands are sitting with excess inventory from the previous year, and hence they're buying a lot less. In fact, despite the fact that the US imports is down by 26%, our revenue decline has been only of the order of 50-odd%. So there is a market share gain. That's how I would characterize it for us. In the sense that our decline has not been as much as the demand decline has been. So eventually, we will catch up. We will probably even outperform when the market, the demand gets restored. My presumption is that this will continue till about end of Q2, and after that, it should start looking up.
By how much has the industry declined? You said you've outperformed the industry. Your revenues are down.
Indian industry has declined by about 18% or something like that.
Okay. And in contrast, your revenues are down 16%, which makes you believe you've gained market share.
That's right. I mean, we operate in a global world, so we look at global indices, and global indices have gone down by 26%. Yeah.
Okay, got that. You're saying that you expect a recovery in H2. So can you tell us, will the coming quarter, that is Q2, be as weak as we saw in Q1? That's one. And also you do have some expansion plans also planned for this year. So taking that on board, what could the full year revenues look like? Also because you said that there will be a recovery in the second half. So what could FY24 revenues look like?
So the second quarter will be again flattish like we've had the Q1. So if you look at our sequential performance since last Q3, it's been more or less flat, and that's the trajectory that we anticipate, going up to H1 of this year. I think H2 onwards, we will start seeing an upward trajectory. It's too early to predict given the macroeconomic fundamentals globally and how, the economic revival of the Western markets are beyond anybody's realm to predict at the moment. But our endeavor would be to catch up as much as possible in the second half of the year so that, we end the year at a strong, with some growth.
Okay, you're hopeful to end the year with some growth. Did you have to give a lot of discounts to your customers given it's a lean period?
So there will always be pressure on that, and we resist that. And we're not ones who would compromise on margins. So yes, there will be pressures. We try our best to resist the pressures. There'll be always some give and take in any business as usual. But, our margins are reflective of the fact that we have maintained it. We have bettered it by our EBITDA margin has only improved this quarter versus the previous first quarter.
So no excessive discounts. Discounts are in line with what we've seen in the past, even in good years.
Correct.
Oh, okay. Talking about the second half once more, it's also when the US will have the festive season, right? Which will, of course, aid your kind of order book. What is that looking like for now? What are the early trends? Are you seeing a pickup in that part?
Yes, indeed. We are seeing a pickup in that part. In the second half of this year, we will be producing for spring and summer of next year. So it's not really for the holiday season, but it's for spring and summer of 2024. That's what we will be producing in the second half of our financial year. And I think the early indications are good. there is some buoyancy in terms of demand that we are seeing at the moment. So I feel confident.
No, I'm talking about the order books for around the December
right.
period. Yeah.
That's right. So for the third quarter, when we will be producing for spring of 24, and the order book seems to be coming in very good.
Mr. Ganapathi, what's the outlook on margins? Because raw material inflation is coming down. You're not giving excessive discounts. You're holding on to your prices. Plus, you expect demand to pick up. So, what's the outlook on margins, the trend as you see it from current levels on gross and absolute EBITDA margins?
So in the long term, I would expect that when I say long term, I would say 2 to 3 years. I would expect our gross EBITDA margins to go up by 1.5%. Now, in the short term, I think if we hold on to it, it'll be great. So I expect our margins to be at these levels for the near term. And as the demand picks up, and as we start seeing more of growth, the operating leverage will kick in, and we will work towards improvement in margin by 1.5%.
You said you'll be happy if you hold on to margins. Are you seeing any signs, any risks that margins would contract from current levels?
At the moment, no.
Okay. So stable margins, similar levels.
Yes.
Okay, that's good to hear. Mr. Ganapathi, the last time we'd spoken to you, you had also said that customers are still very cautious. They're not stocking up on inventory. Can you give us a little bit more color on what's happening? Is the situation sort of as bad as when we spoke earlier? What is the inventory situation like with these customers?
So the good news is that the retail demand has not fallen. On the contrary, it has been minorly positive. So end users are still buying garments. The brands are still saddled with inventory, and inventories are seasonal. So at the moment, what we are producing is all for fall winter. And last winter was mild, so obviously most of the brands were having excess winter stocks. So that's the reason why Q1 and Q2 would also be slightly tepid. That's what we've seen. But most brands are also aggressively liquidating the inventory. So my sense is that very soon that situation will normalize, and then the buys will start coming in.
What about large exporters out of China? Are they dumping products at a lower rate? Are they offering higher discounts because their internal growth has been faltering? So we've seen that in many of the other industries where exports out of China are actually hurting the pricing.
So in this particular case, cost structures in China are very high, and Chinese market has opened up, almost 6-7 months back after a protracted COVID-impacted period. So local demand is catered to by the Chinese players as well. So
go ahead, we can hear you.
Sorry. Yeah, I'm so sorry. So local demand is catered to by the Chinese players too. And what we see is that Chinese players are not really a threat for us at the moment.
Okay, that helps to know. Could you tell us a little bit more about the expansion plans? You have around 100 crores planned for this year, right?
That's right. So all the expansion plan is on track. We are, we are maintaining that. As I see,
how much of this has already? How much of this has already sort of been put into play?
So our unit in Madhya Pradesh is already up and running. It got commissioned in the month of June. So we have had a little over a month of production out there. The fabric unit in Tamil Nadu is still work in progress. It should be ready in the third quarter of this year. So all of that is work in progress. We will be working on one more unit in MP, so that will start sometime towards the later half of this financial year. So I'm not, scaling back on capex at the moment, simply because I see that the year ahead we will have demand resurgence. So we don't see any problem in creating capacity or starting to build capacity.
Are you looking to change your product mix in any way? You said that in the next 2 to 3 years, you want your margins to improve by 150 basis points. So do you have a 3-year vision for the company?
Yeah, of course. The vision really is looking at more diversified growth. So it's growth in terms of geographic diversification. We are largely South India based. We are now expanding in the north of India. We will also look at opportunities wherever we get low cost of manufacturing. So we'll look at that. We're getting into knits, which is a diversification from our wovens only focus. So we are expanding in terms of the product types, geographic locations, etc. We're also adding customers, so that also gives us some degree of diversification of brands that we cater to. So that's the vision. We intend growing, year on year at the rate of 20%, and I think that should happen once the market picks up. And I talked about my EBITDA margin growth as well. So that's our vision.
All right, Mr. Ganapathi, it's been a pleasure having you on this show. Thank you for joining us. And, we wish you all the best for the quarters and years to come. That is the management of Gokaldas Exports telling us that, yes, this quarter was weak, but, it has been weak for the industry as well. This will perhaps extend into Q2, but after that, they do see a recovery coming in. That is in H2 of this financial year. Margins will also